Today, Moderna announced a cancer vaccine. Massive day for humanity, plus a massive day for the stock. As we look pretty much on the chart right now, we can see that Moderna is up over 100% today, and in 140%. And I bet a lot of people are itching to get involved, whether it's to go long the stock, to go short the stock, and whichever way you choose, obviously it comes with a lot of risk because there's a lot of volatility with the stock right this moment. And where it goes, honestly, it's anybody's guess. You know, this could be a situation where it fizzles out and goes back down to maybe $90, $100 until we get more information about it, until there's even more trials and so on. Or this might be the beginning of a mega run to like 200, 300, 400 over the next couple of days. It's impossible to tell. But we can find a way to play this while mitigating our risks. And that's pretty much the name of the game when it comes to trading. Finding ways to manage our risk. This is the idea that I came up with, and I'm going to show it to you guys. I know it's not the most attractive thing to be looking at, but it's a butterfly. And there's a reason why we're going to be looking at a butterfly here. And it's because butterflies tend to be a short volatility play, where when volatility contracts, it helps our P&L. We cannot tell if Moderna is going to end up rallying or selling off from this point on. We cannot make that assumption. But we can make an assumption about its volatility, which is very, very high, the IV that it currently trades at. It's obviously at the 100 percentile across the board here. You could see the monthly options are 130% there. Super, super high. If we look at just normally where it trades at, let me see here. So current is 140, the average is 73. We're basically trading at double the typical volatility that's baked into the options. Obviously, because the stock is up 140%, and it makes sense, right? But it's not going to move 140% every single day. It's not going to move 50% even every single day. It might have a big move tomorrow, it might have a big move the day after, but slowly it's going to stop being as volatile. And as that comes about, we're going to see implied volatility come down. And that enormous amount of volatility that right now is baked into the options, that's going to be sucked out. Look at the options that are meant to be expiring on Friday. I make this video 1 hour before Wednesday session coming to an end. So basically there's only like two full days left to be trading. And right now the 155s are trading for, let's say, an average about a midpoint of $11, right? So you need about a 166. You need 166 to break even on these options. 166, hopefully we fit here. A 9% move, you need a 9% move just to break even on these options. That's what the market is pricing in right now. And after that, you're profitable. IV is very high. So we can make an assumption that over the coming days, implied volatility will come down. And this is what this trade is meant to do. And we do have a bullish lean on Moderna here, where we're giving it the buffer space to the upside. You could create the same thing to the downside, by the way. I'm willing to take the side that, hey, we might need a lean to the upside. One reason being, from what I can tell, is that look at the sizzle index of calls and puts. There are 41 times more puts being bought today than usual. Okay, I mean, there is more volume altogether. That's not too crazy, but there's only 8 times more calls than usual, and the put call ratio is 2 times more calls, 2 times more puts than calls. Now, this could mean buying and selling and so on. It's just transactional. But I mean, even at the market price, there's a lot of puts being transacted here. It's almost like retail is trying to fade this move. You know, that's what it's kind of showing at. So I'm almost willing to take the idea that we might end up fading more so to the upside and trending more to the upside. That's why I have the kind of skewed to the upside here. But what's important is not us being directional here, because we might even take this trade off after like 2 or 3 days, because we just are looking for that volatility to collapse. And I'm going to show you what's going to happen if it does collapse, right? So as you see right now, we're trading right here. Our P&L is essentially nothing. The purple line, by the way, represents the P&L right this moment. The blue line represents the P&L come expiration date, which would be September 19th for these options. You can see that even us moving up right now, even if we were to go up to 170 today, I would only be up $520 for the day. But what would happen if somehow volatility collapsed here, right? So you can see how IV right now is at 100, what is it? I mean, 140. So we could, let's say we dropped this by about 40%, 40% points, which is reasonable to get closer to a norm. Oops. Try and select this. Apologize, sometimes it glitches out. Let's go with a 40% drop, which would be significant, but again, that gets us slowly closer to the norm. Notice what happens to that purple line right away. Instantly goes up. Instead of us having that possible $500 of profit today, if we were to go up to 170, if volatility were to drop closer, not completely to the norm, but closer to the norm, and if we did not move anywhere, we would be up $2,300 on this position. So I just want to show you how crucial volatility is with a butterfly trade. And that is why we're trying to put this butterfly trade on instead of being fully directional, because you can even see that if price were to even go down, if we're wrong here and it goes down to 140, to 130, and volatility, by the way, can still drop with price going down. Normally, when stocks go down, that's when implied volatility go up. That's how it normally is for the indexes. But sometimes for stocks, when they go on this mega squeeze, you get the opposite, where it's like you get a massive move in implied volatility to the upside as the stock is rallying up, and then once it starts to simmer down and start pulling back a little bit, implies volatility also pull down. You get these normally squeezes like with GME, by the way, you've seen that, where like whenever GME starts to skyrocket, implied volatility starts to go up like crazy, and the moment it starts to chillax, implied volatility pulls back when it starts to drop. So same thing here. Moderna can start selling off. It can sell off 10% tomorrow, and implied volatility can absolutely collapse a lot because the 10% move to the downside, that's still contracting vol for it. And in that case, I mean, we would still be profitable, by the way, if that were to happen. So again, that is why we're trying to put this type of trade on here. Because we get some protection if we're wrong on our assumptions. What we're trying to actually trade here is the changes in volatility, right? That we're not expecting volatility to go up even higher tomorrow. Is that possible? Yes, it would probably require us, maybe moving up an additional 80% tomorrow. Then I can definitely imagine implied volatility being up even more aggressively. Because I'm sure, volatility is trying to be sold today to an extent. I'm sure people are selling options. So that's the game plan here. You can move these strikes the way you want to move them. If we go forward in time, which you see me do right here, you could see that pretty much our P&L is being pulled upward, right? Our break-evens on the corners there are also being pulled inwards though, right? So if we're kind of drifting downwards and time is passing, you may want to cut this trade, let's say. But at the same time, if implied volatility keeps dropping, you see what happens here. Again, it keeps giving us that boost in P&L, right? It keeps giving us that boost in P&L. We don't have to wait till September 18th to make significant profits on this butterfly, as you normally would. If we get rid of any drop in vol, see what happens to our P&L right now. See what happens. Look at that, right? Massive drop lower the moment there are no changes in volatility, okay? Compared to what we just had a second ago. Right, compared to this. So again, this is like 3,300 if we're right here, and if we do this, it goes from 3,300 to 8,100, right? There's a drop in volatility. So this is the trade that I will likely be trying to put on. Moderna is actually still looking to make highs on the day. I'm not going to be surprised at all if we do continue to run. So that's why in my eyes, putting some sort of bullish tail on this type of trade makes more sense. I kind of configured this like maybe 2 hours ago. I just kind of had it here on my charts yet. I have yet to put this position on. If we wanted to adjust it, right? Look at this, we're at 150. Look at the spread difference we're talking about here. There's a 30 $30 difference between our strikes here. If we're really bullish, right, we can go with something like a 60-90 and a 120. You know, see what happens when we do that, right? So we push everything outward. Let's go back to today's date. We're giving it even more space to run to the upside. But that is going to affect, obviously, your break-evens on the downside, because if you're wrong and price starts to dump here, and even the volatility starts to dump, as we saw, those tails get pulled in sometimes relatively aggressively. I mean, still here, but 146. I think in the other example, we had like something like 130 as a break-even on the downside. Let's say volatility were to drop. In this case, you're looking at this picture here. Even this looks honestly not that bad to me. This doesn't look that bad to me too. And look how much cushion we're getting to the upside here. That if tomorrow is another crazy day and the stock is up, if the stock is up, you know, to 250 tomorrow, you know, that might be problematic only because volatility is not going to go down. So this whole idea that volatility would drop, you know, it doesn't have to. But because we're so flatlined, actually, as you see here with the strikes, if we go forward tomorrow and if price were to go up, it actually shows us that there's no changes in our P&L here. Now, naturally speaking, if volatility were to continue to go up, let's say we add another 20 points, it pulls in our break-evens, right? So, and to even exaggerate this, see what happens, right? So if we had volatility pop by 50% points more, we would be negative no matter where we are. It'll be impossible to be profitable in the day. Okay, so again, volatility expanding hurts us, volatility contracting helps the trade out, and we are going to be using that to help give us some cushion. In the event that we're wrong, I'm probably going to be putting a bullish bias on the trade. If you're bearish, you can put a bearish bias on the trade, knowing that, hey, as long as the stock stops trading so volatile, even if you're wrong and it keeps breaking to the upside to an extent, you're going to be taking minor losses. And as time passes with this butterfly on, volatility will continue to contract. It's not going to continue trading at these crazy percentiles, and that will continue giving you buffer on the trade. Plus, the moment you get some volatility of trade moving back towards inside the wings, you're going to have some profits to work with. If this video was helpful, if you learned something, leave me a like, subscribe for more content such as this one. Other than that, thank you guys so much for watching. Till next time.